Good afternoon, everyone. Hope everyone had a great Thanksgiving yesterday. Today is Friday, November 29th, the last trading day of the month. We've got one more month left in the year. And we're heading into the Santa rally period. I'm going to talk about that today. First, I want to read the disclaimer. So, want to make sure that everyone understands that I am not a financial advisor. I don't make recommendations on what to buy or sell or when to buy or sell them. No one understands what the market's going to do. No one has any idea. Each person has to determine their own risk profile, trading and investing style, and take responsibility for their own trades. This is for educational purposes only. And if you do decide to engage with a financial advisor, there's a website right here that can help you to research any that you're looking at just to make sure that they're reputable. All right. And also, I have a Black Friday special going until next Tuesday. So anybody that's interested in signing up for a lot of the content I'll show today on the website, there's a $24 off. It's only $99 a year anyway. So this makes it $75, which is a better deal. But it's well worth it. It's got lots of content for that price, and that's an annual membership. Just click on the button on the homepage, go to down where it actually says the promo code is actually a coupon. So it's a promo coupon. And just type in Rally, RALLY. So let's take a look at the home page. I'll show you what I mean. Right there, just click on that button right there. It will take you to a sign up page. You can enter in your information and click on this enter a coupon code right here. And it will then allow you to type in Rally, and that will then give you $75 instead of $99. All right, let's take a look first at the state of the market. Things are still kind of going sideways. Interestingly, the market bias today only had one change, which is very rare. I was actually getting to the end and thinking that maybe there wouldn't be any changes at all, that nothing had gone to bearish or bullish today, but there was one. I'll show you what it is. Anyway, you can see it's kind of treading water, going sideways, slightly up. Today's the last day of the month, and I'll talk about what I think might happen in December in a minute. Let's take a look at some of the charts. NASDAQ right here. Again, sitting above support and had a little nice update today as well. So still consolidating in this area right here. So maybe everything's getting ready to really take off next month. We'll see. The S&P actually, I think, broke to a new high. Yep, it actually closed at a new high, 6,032 today. So it is continuing its move higher right there. So that was positive. Volume both yesterday and today was very light, however. And I mentioned that that was Wednesday, Wednesday and today. And I mentioned it Wednesday that today would be a very light volume day. Could be a lot of volatility. It's a kind of day when the market could get pushed around either way, either up or down. And it looks like it was up today, but very light volume. So we'll see what happens next week. That's really going to tell us what the direction looks like. Bitcoin, somebody asked me to do Bitcoin. I'll try to make a point of looking at this each day. Bitcoin is continuing to try to make its climb to 100,000. It's at 97.5 right now. Pretty much a pretty calm day for Bitcoin. Opened at 95.6 and went to 97.5. So nice up day for Bitcoin. If we look at it in a closer view, Bitcoin right now, it did have a bearish divergence, and then that's the little pullback right there. Pull right back pretty much to where I predicted it might, which was 90,000. Let's see what the low actually was that day. The low was 90,730. So pretty close for a $100,000 stock. That's pretty darn close. And then it started moving back up again. And it looks like it probably will continue. Everything looks pretty good. I think it's going to probably go to 100. So I don't see any reason why it should gets stopped before getting there. There's what it looks like with the cloud. It's above the 21-day, continuing to move up. And Keltner channels, I always like to look at. Now you can see it got to the 4X Keltner channel up here. And it stayed up there for a while, so that's very strong. And then that's usually when things pull back. And in this case, it pulled back a little bit, but then went right back above it again. So very strong uptrend right there. But again, it went to the 4X Keltner channel. I'll cover these on a technical Tuesday at some point and pull right back to that support line that I mentioned. And now it's heading back up again. And it's in the 2X channel right now. So it still has plenty of room to move. In fact, the 3X is right in the 100K range. So it easily could get to 100K next week or sometime in December. I would not be surprised at all if that happens. There's a squeeze. There's really not too much of a squeeze yet. If it keeps going sideways, there will be, though. This is an example of a John Carter squeeze right back here. So when the Bollinger Bands goes inside of the Keltner channel, the stock gets squeezed. That usually means it's going sideways with very low volatility, and then it explodes out of that at some point, either way, up or down. Just out of curiosity, moving average. This is the moving average lines. You can see, you like to see all these stacked. So the shorter ones on top and the longer ones on the bottom. So this is a 5-day on the top, the pink one, and this is a 200-day, the gray one at the bottom. These are a variety of different time frames. Down at the bottom, it'll show you what they all are. 5, 21, 34, 40, 50, 60, 70, all the way up to 200. That's what that looks like. That is a extremely bullish chart. So you can see where it went sideways through here, all the moving averages sort of pinched together, and then it took off. And this is where it kind of went negative a little bit, but some of the faster ones crossed over, but they didn't all cross over. And right now, ever since back here in October, it just keeps getting more and more bullish, actually. You can see how much it's separated. The moving average lines are separating, which means it's going up faster than the trailing moving averages can keep up with it. So I don't see any reason why it shouldn't hit 100,000. All right, what else shall we look at? I do want to show you a couple of things on the charts page. We'll take a look at since it's Friday, I'm going to try to do this every Friday at the end of the week. We'll look at the 10-minute charts with the aggressive and defensive sectors. So today, here's what it looks like. So only 4 days of this week. This vertical blue line is the open on Monday. So that's the horizontal line there. You can see where it opened. It pretty much traded sideways right along that open until today. Today it started to accelerate right at the very end, the last 10 minutes of pullback, but that's pretty normal for a Friday, normal for the end of the day, and certainly normal for a Friday. So kind of treading water and then took off today, maybe getting ready for December. Here's last week's open down here. So you can see we're moving higher. And then the sectors, technology sector makes up almost 33% of the S&P. So it's the largest of all the sectors. And it actually underperformed for the week. So you can see it opened here and it closed here. So it underperformed for the week. That's this dashed dark red line is the open for Monday for each of the sectors. Financials is the next largest one in the aggressive sectors, and it outperformed slightly for the week. Discretionary first started going down and then started coming back up again. Discretionary has been the strongest sector lately, so it's starting to move back up. Communication services, where the internet stocks are, treaded water for most of the week, underperformed for the week. Industrials pretty much is flat for the week. And then if we look at the defensive sectors, and this tells us what kind of rotation is happening. And you can see healthcare was the strongest one. It's the strongest of the defensive sectors with almost 12% of the S&P in healthcare. So it opened here, closed here, so it opened higher, which means it outperformed for the week. Staples outperformed slightly. Energy gave back quite a bit. Energy was actually doing better up until this week. And this week it pulled back and underperformed for the week. Utilities outperformed. So it had been doing really well, pulled back a little bit beginning of the week, and then started going back up. So it's looking good in materials, which is where gold is, actually is flat for the week. Started to come up a little bit, but pretty much ended flat. So that's what the sectors look like. The way I interpret this is pretty good breadth across the board. Most of the sectors are performing they're either flat or outperforming. There's a few that are underperforming, but mostly things look pretty good, especially with an update like we had today. Speaking of breadth, one of the things I like to look at for breadth, right down here on the left-hand side, underneath the sentiment section, there's the McClellan oscillators. These basically, I'm going to look at the New York Stock Exchange. These essentially is a moving average of the advanced decline lines. So this can give you a sense for how many stocks are advancing or declining as the market rises or falls. So as the market has been rising, you can see down here, ever since August, in general, the market has been making higher highs and higher lows. However, it's been doing so with fewer and fewer advancers. You can see where this line is going down right up until the beginning of November, right here. So it's making new highs with fewer advancing issues. So that's not what you want to see. That's a negative divergence. The last month, pretty much the month of November, however, it hasn't really made a new high. So that's important to keep an eye on. You want to look at both of these things, not just whether one is making lower lows, but what is that in relation to the market itself? And the market itself, even though this is making a higher, which means there's more advancers, but the market is just flat. The market has not gone up like it did back here. So the market ended right here, pretty much flat, and it did make a new high. And the advancers outweigh the decliners, which is good. So they're starting to move up, but the market needs to move up too. So what this means is most likely large caps are lagging, small caps are trying to catch up and trying to carry the market. So we'll keep an eye on this. I like to look at this every so often. Down below is the bullish percent index for the S&P. So the percentage of bullish moves versus bearish moves. And you can see it's just at 70, so that's not too concerning. When it gets well above it, that's usually where reversals happen. So you can see right there, reversal when this one is up to 80. And it made it over 70 here, which was just beginning a downtrend. So it's not an exact science. It actually works better when it gets really low, like down here when it got almost 45% down here, that was the bottom. These are better for actually picking bottoms than they are for picking tops. So if we ever go into an extended downtrend, I'll show you how we can identify where the bottom is being made. So keep an eye on that. The other one is the NASDAQ. It does pretty much the same thing. McClellan oscillators for the NASDAQ. And you can see once again, even as the NASDAQ was heading higher, it was doing so with fewer and fewer advancers. Now it broke this downtrend line right there, but there's the horizontal line, that dotted blue line right there. So couldn't get above that. It's right at it right now. But again, the NASDAQ 100 is moving down. So if there's more advancers participating, you should see this making new highs. It should be breaking out above this previous high, and it's not doing that. So again, the breadth is okay. It's just that I think the large cap stocks are not participating. It's not pushing it up. And bullish percent for the NDX is also at 70. So it's getting close to the area where it reverses. You can see it's pretty clear on this one. Right there was the high, and it was hitting 70 right there. Almost hit it right there. Hit it right there. That was the high. It's hitting it again right now, but it hasn't made a new high. So we'll have to keep an eye on that. Here's the channel. If it breaks below the channel and then the 50-day is right below it, those are very important. And then there's this horizontal support line. So all three of these things are right in that area. So we need to watch that and hope that it moves higher. Hopefully the Santa rally, which I'll talk about in a minute, is going to push all of this much higher. One more thing over here. Under the sentiment section, I showed the risk on, risk off chart last week. I'll show you the price to earnings chart today. So this is price to earnings, and I've added something to this, which is the CAPE ratio, and I'll mention that in a second. So this is the S&P right here. You can see where it broke out back here. It actually just broke out again today. This is the VIX. Whenever the VIX up here, so these are moving average lines for the VIX. So 21 day is the blue one, and a 50 is the red one. Whenever the blue one, the 21 day, goes above the zero line, the VIX is getting overextended, which means the market usually goes down. You can see it happening right there. The VIX started moving higher and the market started moving lower. And when it went above zero, that was confirmation that we were starting a downtrend right here. And then it stayed above zero until here. So when it goes back below zero, that means the VIX is calming down and the market becomes more bullish. So that was the confirmation that there was a bullish trend now in place. This is back in April of 23, quite a while ago. And we've been in that area since then. Now you can follow those lines down to the PE ratio, and you can see when the market went through the cyclical bear in 22, and PEs kind of dropped down to the lows down here, down to 20, actually below 20. So the normal range is between 20 and 25. Typically, this is S&P PE, price to earnings ratio. It went above that basically right in here, beginning of this year, and steadily climbed higher and higher. We're a little over 30 right now. We're actually at 30.62 is the current PE ratio. So that is an extended price to earnings ratio. That doesn't mean it can't keep going. It can. You can see how high it got back here. This is post-COVID, but it got way up here to 42, about 42, way back here. And this parallel dash blue line is the 30 area right there. So even back here in middle of 2021, it was coming down, but it was still above 30 through that period. Now the CAPE ratio is the Shiller inflation adjusted or cyclically adjusted price to earnings ratio. This is something that Shiller came up with that he said was a little more accurate to determine where markets are going to turn. And what I did was I did a relative chart of the inflation adjusted PE versus the actual PE. So the actual PE is what you see up here. And this is the inflation adjusted price to earnings ratio. If it's moving down, that means the CAPE, the inflation adjusted ratio, is underperforming the regular PE. When it's moving up, that means the inflation adjusted is outperforming the regular PE. And sometimes I can tell you when a market is overvalued. And right now, you might think that it is overvalued for both of these measures, with a high PE of 30 and a CAPE going up. I think the number is actually 38, which is the third highest, I think, in history right now. However, if you make a comparison to PE itself, yes, it's just breaking this downtrend line, but it still needs to get through this level here and this level here to be higher than what it has already been back in 22. So it's starting, both of these are beginning to get to a concerning area, but I don't think they're quite there yet. And then earnings down here, this was the high for earnings back in 22, and it still has not taken out that high, even though earnings have slowly crept higher. And I think part of the reason for this is that the expectations for earnings have been lowered. So the bar keeps going down, so companies keep beating that lowered bar. So earnings are slowly, slightly moving higher, but they still have not taken out this 2022 high back here, which is where the high for the CAPE ratio was the low for the PE ratio. And of course, the markets went down. So again, this is something that we can keep an eye on. You can get this at any time on the website in the left-hand side under the sentiment section, right there for price to earnings ratio. the weekly chart right there. So that's where that is. Okay, one question that came in that I want to get to was regarding a particular stock, CRDO. Actually, no, I'm going to wait on this. I'm going to wait because he asked me how to put it into the spreadsheet. So I'm going to wait till we actually look at the daily scan spreadsheet before we talk about this, and then I'll cover it then. So the last thing I want to talk about is the Santa rally. So first off, let's look at what Stock Traders Almanac has to say. And this is December. This will be in the newsletter on Saturday, tomorrow. We're right here. So this is the beginning of December. Oops. Sorry. Beginning of December right here. This is Stock Traders Almanac's wording up here. Choppy first half before the year-end rally, January effect, small cap outperformance starting in mid-December. That arrow should actually be pointing back over here. Mid-December is back here in this first red arrow. And that's right where you can see the small caps are the dashed dark red line. This is during an election cycle, and the solid one is all years going back to 2003 for the small caps. But all election years back to 1950. So you can see small caps right in this area, right after the CPI report, coincidentally, and just before options expiration. So options expiration this week might actually be positive because we're kind of going to be choppy heading into it. So it might, the max pain might show an uptrend potentially. And it's also the last one for the quarter, which usually has more impact. I'll talk about that when we get closer to it. But anyway, January effect, which we're going to start tracking. I'm going to show you how I'm going to do that in a second. But keep this in mind. So we're right over here. We had kind of a sideways movement this week. We may be coming out of that start of next week, starting to move up a little higher, and then back down again right around the inflation report. I think the Fed's going to cut. So I think the market will like that. So the next day, which is right here, then after the CPI, actually during this day, because it comes out in the morning, so probably this day might start. And then small caps really take off right into the end of the year. So that's what that looks like. Now, tracking the Santa rally and the January effect. On the website, on the charts page, at the very top, I've got the Santa rally for the last 2 years, and I'm going to start tracking it for this year as well. So if we look at 23, Santa rally tracks 3 things. It tracks Santa rally, which is the last 5 days of the year plus the first 2 days of the new year. This year it starts on December 24th. The second component is the first 5 trading days of January. And the final one is the full month. So this all makes up the January effect or the January barometer. You can see in 23, all 3 of them were positive. So up 1.4, up 6.18, and up 0.8 for the Santa rally. Santa rally was the first one, and it was the lowest one. The next one got a little bit better, and the last one got even better. So that's what you want to see. You want to see the trend moving higher like that as we move into January. So and you can see for the year up 21% for 23. Now, how do we do this year? We're not finished with this year yet, but I've got it tracked here on the website. So there's the 3 components. You can see the Santa rally was down 1%. First 5 trading days was down, but barely, so practically flat. And then the third one, month of January, was up. So again, you can see the trend, down 1, flat, and then up. So that indicates that we will have a positive year by the end of the year. And I did all of this way back here in January. In fact, I started tracking it before the second 2 even hit. So we started to watch it way back here. And you can see this year so far, we're not done yet, but so far we're up 27% for the year. So this can be a pretty accurate measure, and it's fun to watch it anyway. This was the close last year, 47.52. Right now we're at 6,032. So, if we went up 30% again next year, that's what we'd be at 8,000 by the end of the year. Anyone think that we could do that? Let me know. Leave a comment. Let me know if you think we can make. Let me know if you think we can make it to 7,500 by the end of next year. How about that? That'll be fun to watch. All right. So the current one, 2025, there's not much here yet because we're not even started December. But this is the way it looks right now. So 2025 Santa Rally is the last 5 days. Starts on 12/24. So the day before Christmas is when the Santa Rally begins. Contrary to what most people think, that a lot of people think that it starts at the beginning of December, but that's not true. It actually starts right around Christmas itself and goes into the first 2 days of the new year. This is put together by Stock Traders Almanac, by the way, years ago. And then we'll track the first 5 days, and then we'll track the full month and see how things look. So keep an eye on that. And anyone that is a subscriber, you can always come here as we start tracking it and just click on this one right here. Click on this year's if you want to see what the status is. So that's it for Santa Rally. It'll be interesting to watch, see how that plays out. For the week, let me close some of these. For the week, we kind of went flat. I showed you that before till today. We had a little bit of a rally today, which was nice. But let's take a look at this one chart that this person asked me about. And we'll look at it on the default image. So there's CRDO, Credo Technology. It's in the telecom equipment area, technology sector. It will have earnings on the 2nd. So that's coming up Monday. So that by itself right there. And this person said that he got in. I assume he didn't say where he got in, what price, but I assume it's right there when it went above the 21 day. And then he said he got out on strength today. And if we look at the 10-minute chart, which is right here, you can see that it gave back a lot through the second half of the day. So actually starting almost from about 10:30, it just steadily sold off, and earnings are coming out on Monday. So probably a good idea to sell into strength on this one. But his question was, how do I put this into the spreadsheet, into the worksheet? So I'm going to assume that he got in right there, and I will make that, the high was 44.22, so let's call it 44. And he got out on strength over here. High was 51. Let's make it 50. Probably close enough. He didn't really give me the numbers, but I'm going to assume probably around 50. So 44 to 50 in 1, 2, 3, 4, 5, 6, 7 days. Basically a week. That's probably going to be pretty good. So let's take a look at the worksheet first off. And I'll do that one first, and then we'll look at what happened on here. All right, so the first thing we can see is our gain loss right now. If all of these stop out exactly where they're at, would be 14%. And by the way, right now is 1 month since we started doing that. 31 days is today, so pretty much 1 month since we started tracking all of these. The win-loss ratio was 39%. My goal is 40. So I want 4 out of 10 to be winners, but I want the winners to be bigger than the losers. And even though if these get stopped out, it's going to be almost a 10% loss if they stop out exactly where they're at. Overall, for the whole portfolio, it will be a 14% gain because these that have already closed are at a 24% gain. So 14% in a month is pretty good. Some people would like 14% in a year. But doing this with very low risk, by the way. So let's see. Let's go back to the chart again. I want to see what date he probably got in. Probably on November 19th. So since he's asking me this when he's already sold, it's not going to go up here for tracking purposes. We're going to put it down here for closed trades. So Um, the scan date was 11/26. I think that's what I said. No, 11/19. 11/19 at 44. So this is 11/19. I don't know what the scan was, but let's just assume it was downtrend reversal. I don't know. Buy date, we'll make it the same day, 11/19. And the stock is CRDO. And the earnings are 12/2. So you can see it's in red. 13 days from the buy date. So this days to earnings will not change. It will tell you what the number of days since you bought it, but it's not going to change each day as it gets closer. It's just going to keep it right there. However, as we get closer, it may actually change it to red. But right now it's 13 days, so pretty tight. Proposed entry, call it 44. Purchase price 44. Stop price we'll figure out in a minute. Actually, let's do that now. So for the stop price, what I like to do is look at the chart. So let's look at the chart. We bought it right there. The low back here was 39.18. So I would put a stop right there at 39. So this is a good illustration of why doing it this way is very low risk. So you wait for these are all stocks from my list of strong stocks. They continually make the top 10 list. So you want things that are making higher highs consistently, and then wait for a pullback here, and then wait for it to go back above the 21-day, which is the reversion to the mean. So all of these things took place, went back above right there, and this was the low, 39.18. So we're going to put the stop right at 39. So that's the nice thing about this. If for some reason we're wrong about this breakout, then there's very low risk right at 39, basically $5. So let's see what percent that's going to be. So if we go over here and put in stop price of 39, that's 11%. That's a little higher than what I normally would like. So I'll show you how I probably would do this one. And now if we go to the risk calculator and put in the stock up here, CRDO, which is using an imaginary amount, we need to know what the ATR, the average true range, is. So you put the stock ticker in there and click on this click here button, and it will bring up a chart in FinViz. Actually shows you what the resistance line is right there. It's another good reason to be out today. The support line is down here, probably at 42, 43, just about 43 down here. But the ATR is $2.80. So $2.80, we'll put that in as the ATR right here, $2.80. And then the buy price is $44. And now we said, what do we say, 19 over here? So 19 would give us a, oops, that's not right, 44, no, 39, sorry. 39, not 19. That's better. All right, so that's an 11.36 loss if we got stopped out right away. Or we can go with the Investors Business Daily recommendation, which is 7%, and that would put it at 40, basically $41. If we took the FinViz chart and used 43, that would only be a 2.27% loss. But what you'll notice in either of these cases, what this does is it calculates the trade rule, never risk more than 1% on any one trade. The account rule, meaning if the stock goes out of business tomorrow and ceases to exist, you only lose 7%. And then the ATR gives you a volatility rule, and it calculates each of these three and takes the most conservative to determine how many shares you should own. And you can see if we just did this rule, it would be 1,000. If we just did this rule, it would be 159. But using all of these together, so the ATR actually makes it a little more conservative, brings it to 150 shares down here. So that's what we will buy, 150 shares. And you'll also notice that as I was changing these things, the number of shares didn't really change. So even though this is 7% over here, and my bell for my closing bell just went off on my computer because it doesn't know that it's just a half a day today, I guess. So over here, if we put 39 in here again, you can see it's 11% loss, but the number of shares is still the same. If I put my stop way down, let's put it at $20. All right, now I can only buy 40 shares. Now my loss is 54%, much bigger loss, but my risk stays the same because now it doesn't let me buy 150 shares. It only lets me buy 40. So that's the way this risk calculator works. And it's a great way. It's a great way, especially when you're starting out, to figure out how many shares you should own to keep your risk low. At some point, when you get more confident and you feel better about your thesis or choices on the stocks, you can actually go higher. You can increase your risk. You can do it up here by changing this 7% to 20% if you want to, or you can just double it if you want to, whatever you want. But in this case, it's 150 shares is what we will put in here. 150. And what do we say here for the 7% rule was, let's call it $41. So now our stop is at 41. So that's a little less than 7%. All right. Number of shares is 150. So that's where we are. So now he closed this out, and I am going to, he didn't tell me what, but I'm going to assume 50 bucks. So $50 today, 11/29. That's $900 gain, 14% gain on this particular one in 10 trading days. And so that's a nice gain, 14% in 10 days. So this was closed. This one will be interesting to watch to see what happens with earnings next week on Monday. So that's the way you do it. That's how you enter these things in. It can get a little tricky when you start closing things and moving them down because you have to know a little bit about Excel to do some of that. But if you have any questions, anybody that has an annual membership can get this spreadsheet, and I just updated it today as well. So I'm going to go back. I'm just going to hit back and get rid of that line. Down here, I usually like to just delete any line that doesn't have a calculation in it. All right, so that's where we are now. What happened today? We have two more that stopped out today. So DocuSign stopped out at 80 bucks for a 12.7% gain. There it is, went below the stop line right there. You can see it right there. And the other one that stopped out was ADMA. ADMA actually pulled back up a little bit, but big red candle today. So came down, it ended at 20, actually stopped out at $20. The low was 19.69 for the day. And the 21 day is at $20.31. So it's still below the 21 day, but this one is out of the portfolio now. Can always add it later if we want to, if it gives us another signal. But for now, it's out in this case for almost a 5% loss. So right now, the portfolio stands at 14, even if all these stop out at almost a 10% loss, that would still be at 14% with a 39% win-loss ratio. So how do these look? Let's look at each one. Intel. Intel moved up a little bit today. So sitting right between the 50 and the 21 day, and it's above the stop. See that horizontal green line is the stop. Kava, barely, just sitting right above the stop. So this one could easily get stopped out at some point. It's 140.80, and I think the stop is 139. So we're about $2 away on that one. Very low volume, so that's actually a good sign. In this case, you could decide, I don't like moving stops lower, but because of the low volume on the pullback right here, you potentially could move it down to the 50-day or basically back to our original stop price down here where that dashed blue line is. Let's look at Gilead. Gilead still going up. We actually moved the stop up today to break even. So Gilead, we did move that stop upwards. So we're at break even on that one. Again, low volume, but this week is a low volume week anyway, so that's not surprising. And then Intel, we looked at Intel. WGS was the other one. So it's above the stop price right now. And again, very low volume today, so it didn't really do much. So this one might start to take off. The healthcare sector, by the way, actually has been pretty good the last week or so. Last couple of weeks, healthcare is really perking up and starting to move higher. So both of those stocks, that one and Adma was in healthcare, but Gilead is also healthcare. So that one's looking pretty good. Let me show you one that I'm sorry that we got stopped out. And this will happen. So hopefully one thing that this is teaching you is you don't need to get married to any one particular stock. You don't have to really fall in love with a stock, because the way this works is there is always another one coming. Just watching the scans will give us more opportunities. Sometimes it'll give us the same opportunities back again, but the scans will always produce more. So let's look at SoundHound. That one got stopped out, and look at that. Big move up today. So the stop price was at, let me see if it's actually in, might have moved it out of holdings. Yeah, I think it's in exits. Let's see, SoundHound here. Yeah, so there's the stop right there. So you can see 2 days ago it moved below the stop. Put the stop up here at prior resistance, and it went through it, stopped out. The next day it went a little higher, and then today went up 17% for today. So this is going to happen for everyone that takes off like this without you. There will be just as many or maybe more that drop through and gap down big time, and you will be so glad that you did get stopped out. But sometimes this is what happens. Now, there's no reason why we can't get back into this, but we won't get back in right now. We're not going to chase it. So if this does pull back again, we'll keep an eye on it and maybe get back in. So what I've learned and what I put in the worksheet is the stop on this one probably should have been down here. So at this level here, where this candle stopped and this candle stopped, and right at the 21-day moving average, which is usually where I put my stops, but this one was so volatile that I could foresee it coming down just as fast as it went up. So, but in this case, we probably should have put the stop down here at the 21-day. And if you look at the worksheet, that's the SoundHound right here. It's a comment that I made, stop lower, meaning I should have had the stop lower. It's a short squeeze candidate also. So unfortunately, that's what happens, but that's just the way it goes. VRT, I think, also moved. No, VRT is just sitting right there, not doing much. All right. So that's it for today. Hope everyone had a very nice Thanksgiving. Let me know if you have any questions or you would like me to cover anything. I'd be happy to do that. And by the way, for those that are annual subscribers or those that want to take advantage of the special, for subscribers, I will do once a month, or I try to do once a month. So if you want to do the Black Friday, you will be able to take advantage of this. I try once a month, and on the webinars and newsletters page, I try to do a Zoom call with members. And this is something where I introduce anything that's new on the website and then just open it up to questions, and people can ask me about indicators or technical analysis or the general market or the election or historical trends or individual stocks, whatever you want to talk about. And you can see these things go 2.5, 3 hours, 4 hours sometimes. I'll just keep going until everybody's done asking questions or my wife tells me we have to go to dinner. One of those two things will happen. But I'm going to probably do this on the 14th. That's a Saturday. So keep that in mind. If anyone signs up between now and the 14th, then you will get the Zoom meeting and you'll be able to participate or just listen. There's lots of people that join and just listen. There's always lots of people that ask tons of questions too. So you probably will get your question answered one way or the other. But that'll be out there. There's also some training sessions that I've done, and also Tom Bowley. He did two that were open to the public, and I put his training sessions on here. Um, so anybody that wants to learn more about technical analysis, all of that is right here on the website as well. So you're always welcome to participate that way. So that's it. Breakpointtrading.net is the website, and the YouTube channel button is right up here in the upper right. So look forward to talking to everybody on the 14th. And also, I'll be back on Monday to see how the market did as we start off our Santa rally in December. Thanks, everyone. Have a great weekend, and good luck trading. Take care.